송원근 TV 책 속 한 장면. 오늘은 책이 아니고 과연 현재의 세계 경제가 어디로 갈 것인지에 대한 이해를 높일 수 있는 내용을 하나 소개해 드리려고 합니다. 그 내용은 과연 미국 중심의 이제 달러 지배가 과연 붕괴할 것인가에 관한 얘기고, 이게 이제 주류 경제학자들도 이 탈달러화를 되게 우려를 많이 하고 있고, 또 실제로 세계 경제가 중국의 부상과 함께 이런 달러 지배 붕괴 상황으로 가고 있다. 이건 역시 세계 패권 국가가 미국에서 중국으로 과연 바뀔 것인가에 관한 얘기와도 관련이 있다고 볼 수 있겠습니다. 그래서 파이낸셜 타임스 같은 신문에 이 아이켄 그린이라든지 켄 로거프, 미국의 주류 경제학자들도 이제 이런 걱정을 하고 있다는 것이죠. 그래서 그런 얘기들을 종합해서 한 8가지 원인으로 정리를 했는데, 그 내용을 소개해 드리려고 합니다. 각각의 내용은 조금 더 자세하게 설명이 되어 있으니까 참조를 하시면 좋겠고요. 그래서 이제 맨 마지막에 보면 말하라고 합의라는 얘기도 나오고, 또 물론 이제 그 원인 중에 하나는 트럼프가 각 국가들에 대해서 했던 관세 조치, 또 경제적인 공격, 또 미국의 환율, 미국 달러화의 약세, 또 미국 국채에 대한 수요 감소, 이제 물론 미국의 인플레이션, 이런 것들도 원인이 되고 있다고 얘기하고 있습니다. 그 얘기를 직접 동영상을 통해서 같이 들어보겠습니다.
Reasons. The other main reason why central banks have been stockpiling gold is, as this research paper notes, the imposition of financial sanctions by the US, Europe, and Japan, by the collective West, which has led central banks to seek gold because it's much more difficult for Western countries to seize their gold like they did to Russia's central banks in 2022. The US and Europe froze more than $300 billion worth of dollar and euro denominated assets. It's pretty easy for the US Federal Reserve and the European Central Bank to do that. It's difficult for foreign governments to seize Russia's gold reserves unless Russia has its gold reserves in another central bank. Like, for instance, Venezuela had billions of dollars worth of gold that belongs to the Venezuelan central bank that were physically being held in the Bank of England, and the British government stole that gold from Venezuela and refuses to get it back. This was during the coup attempt in Venezuela led by the first Trump administration in 2019. And even though that coup attempt clearly failed, the Bank of England has refused to give that gold back to Venezuela. And we all know that Western governments are not going to give back the $300 billion worth of assets they froze, in scare quotes, from Russia. They didn't just freeze it. They seized it. They stole it. So this was a huge wake-up call to central banks around the world. They saw that Western governments, Western pirates, stole the central bank reserves of Iran, Venezuela, Afghanistan, and then they went after Russia. And a lot of countries said, wow, if they can take Russia's reserves, they could easily take our reserves as well. So more and more countries, especially in BRICS or interested in BRICS, global South countries, have been piling into gold as an alternative to the US dollar. But that's not the only reason that's leading to the decline of US dollar dominance. I made a list of the major factors that are fueling de-dollarization. I already talked about the use of sanctions and the weaponization of the US dollar. 1/3 of all countries on earth are currently suffering from some form of US sanctions, the vast majority of which are illegal because they are unilateral, they violate international law. And if you look at the number of sanctions applied per president, you can see that it just keeps going up and up ever since George W. Bush. This is bipartisan. Under Bush and Barack Obama and Donald Trump in his first term and Joe Biden, each president imposed thousands of sanctions. So that's a very significant reason driving de-dollarization. Another is Trump's threats of tariffs and his economic attacks on many countries, including longtime allies like Europe. Trump imposed an unequal treaty on Europe, levying 15% tariffs on European exports to the US, while Europe is not allowed to retaliate with its own tariffs on US goods. So this is leading many countries to rethink their trade dependency with the US. Furthermore, this is fueling de-dollarization because if other countries can't trade with the US, then they simply won't have enough dollars to do all of their international trade and investment using US dollars. Trump has repeatedly said he wants to end the US trade deficit with the rest of the world, which is called the US current account deficit. But ironically, in order to maintain US dollar dominance, in order to maintain the dollar as the global reserve currency, the US has to run a chronic current account deficit, a trade deficit with other countries, because other countries need to get access to dollars in order to use dollars in international trade and investment. So if Trump is truly serious about reducing the US current account deficit, it's going to inevitably lead to further de-dollarization. And this is just one example of the many contradictory policies being carried out by the Trump administration. Another is that Trump is constantly pushing for lower US interest rates, and he's putting a lot of pressure on the US central bank, the Federal Reserve, and foreign investors are worried about what they call the end of so-called central bank independence. Now, this is a very neoliberal concept that has been promoted by the US and the IMF and the World Bank for many decades. In reality, most central banks are not truly independent. There's always political pressure, and there's always pressure by the financial sector. And essentially, this neoliberal doctrine says that investors, that Wall Street, that capital markets should determine what interest rate policy is, and not the government, not the people, not democracy. So it's inherently an undemocratic concept that serves the interests of investors and large corporate interests. But even though I'm critical of this whole idea of so-called central bank independence, a lot of foreign investors take this very seriously. And this means that if they're afraid of the end of central bank independence or the illusion of it in the United States, they may start to sell off their US assets. So it doesn't matter what I and critics of this concept think. It matters what holders of US dollar assets think. And a lot of these foreign holders are getting uncomfortable with Trump's policies. And this could lead to a further sell-off of US dollar assets, which could lead to a further decline in the value of the dollar against other major currencies and further de-dollarization. And in particular, what Wall Street is concerned about is Trump's attempt to fire the chair of the Federal Reserve, Jerome Powell. Trump has repeatedly attacked Jerome Powell, who's supposed to be independent, although ironically, it was Trump who appointed Powell as the head of the Fed during Trump's first term as president. But regardless, on his social media platform, Truth Social, his copy of Twitter, Trump has constantly attacked Powell, claiming, quote, he is too late and actually too angry, too stupid, and too political to have the job of Fed chair, end quote. And because of the doctrine of so-called central bank independence, Trump, as the US president, technically cannot legally fire the chair of the Fed. So Trump has been desperately looking for an excuse to fire Powell, and this led to this hilarious photo op where Trump went to go see the renovations being done at the Federal Reserve building with Jerome Powell, and they had these hard hats on. And you could see that Trump was clearly angry, and he was heavily pressuring Powell to reduce interest rates because Trump wants to stimulate the economy. The main interest rate set by the Fed is the overnight lending rate, and it's known as the Fed funds rate. And it has been quite high since 2022 because there was very significant consumer price inflation in the US coming out of the pandemic. So the Fed rapidly raised interest rates to try to bring down that consumer price inflation. Trump wants to significantly bring down the Fed funds rate from 4.33% to 3 or even 2%. And this is not only because Trump wants to stimulate the economy, but it's also because Trump is desperate to bring down the interest payments that the US government is paying on its massive debt. Because as the Fed raised interest rates, that meant that the yields on Treasury securities, that is US government debt, climbed higher and higher, which meant that each year the US government now needs to spend more and more just paying the interest on its debt. Whereas after the 2008 financial crisis, interest rates were very low, basically zero, which meant that even though the US government had very high debt that was growing, the interest payments were relatively low because the yields on US treasuries were also very low. But after the Fed raised interest rates, yields have now been very high, and as of 2024, the federal government has been paying 3% of GDP just on the interest on its debt. And the US federal debt is over 120% of GDP, which can be managed if interest rates stay low. Japan has had its public debt at over 200% of GDP, but the interest rates in Japan are much lower than the interest rates in the US. So this is why the Trump administration has been desperate to bring down the yields on US Treasury securities, especially the yield on the 10-year Treasury note, which is used to set interest rates in other parts of the economy, like mortgages and car loans. And Trump, as his Treasury Secretary, appointed the billionaire hedge fund manager from Wall Street, Scott Bessent. And Bessent has repeatedly made it clear that he is committed to trying to bring down the 10-year Treasury yield. But Bessent has failed to do so. The 10-year yield has stayed pretty consistent between around 4.25% and 4.5%. And there also has been some pretty significant volatility, like massive fluctuation after Trump announced his tariffs initially in April. Bond yields temporarily fell to under 4%, and then they shot back up to 4.5%. And this significant volatility in the bond market has scared a lot of foreign investors. And what the US government is especially concerned about is foreign investors dumping their US Treasury securities. And what we've seen over the past decade is a pretty significant decline in the overall share of US Treasury securities held by foreign investors. In 2015, it was around 34%, 1/3 of US Treasuries that were held by foreigners. And in the past decade, it has fallen by 10 percentage points. And in the past few years, less than 25%, less than a quarter of US Treasuries are held by foreigners. And if you look at central banks around the world, one of the biggest net sellers has been the People's Bank of China. China has significantly reduced its holdings, at least its official holdings, of US Treasury securities, particularly since 2022, when, in response to the war in Ukraine, Western governments seized Russia's dollar and euro holdings, and this scared authorities in Beijing. But at the same time, as BRICS countries have been de-dollarizing, we've seen that in Europe, more and more investors in Europe have been buying US Treasury securities. So you can see this as a kind of de-risking. Adversaries of the US, countries at least being targeted by the US government, have been reducing their exposure to US government debt, whereas investors in allied countries or vassals like in Europe, they have been increasing their holdings of US debt. And what's also interesting is to compare foreign private holders of US Treasuries versus foreign official investors. You can see that following the seizure of Russia's assets in 2022, there was a significant decline in foreign official holdings of US Treasuries. But in the past few years, there's been a marked increase in foreign private investments in US Treasuries. And a key reason for this is that hedge funds, including foreign hedge funds, have been buying lots and lots of US Treasury securities in order to engage in a sophisticated form of arbitrage known as the basis trade. However, this has also been risky because a lot of this is based on big leverage, on taking lots and lots of debt in order to engage in this arbitrage that involves a few basis points. I mean, the difference in these markets is very small and the amount of leverage is very high, so it's very risky. And we actually saw an example of this in April when Trump initially announced his tariffs. This led to a temporary crisis, significant volatility in not only the US bond market, it also spread to other bond markets around the world as hedge funds were forced to sell the US Treasury holdings they had because they had margin calls. The people who lended them money wanted to make sure that the hedge funds could actually pay back the lenders. So what happened is that the yields on US Treasury securities shot up, especially not only in the 10-year, but also on the 30-year bond. There was an increase to over 5%, which was the steepest increase since 1981. And as I said, this caused significant turmoil in other bond markets, especially in the Japanese bond market. So the point that I'm trying to stress here is that the Trump administration really wants to bring down the yields on US Treasury securities, especially the 10-year note, but it's much, much easier said than done. The US economy is so financialized, and there are so many moving parts and different factors all coming together that make this very difficult and very risky, because essentially the US economy is built on this massive financial house of cards, these huge bubbles in not only the US bond market, but also the US stock market. And whenever there's a crisis in the US bond market, it often leads to a sell-off in the US stock market, which could also lead to a fiscal crisis in the US, because as stock prices fall, it also leads to a fall in tax receipts for the US government. So there are all of these factors that are linked together that make it very hard for the US to try to bring down these treasury yields. And this is also a cause for concern for many US corporations, because as the US government's borrowing costs are increasing, corporate borrowing costs are also increasing. Goldman Sachs, the major US investment bank on Wall Street, published a note about this in 2023 titled "The Corporate Debt Maturity Wall," noting how the Fed's tightening cycle, raising interest rates, has also led to an increase in corporate bond yields. They showed how, as the Federal Reserve raised interest rates in 2022, it led to a significant increase in corporate bond yields. During the pandemic in 2020 and 2021, investment-grade corporate bond yields were just around 2%. But since then, they have shot up to over 5%. And although a lot of US corporations piled up on debt when interest rates were very low during the pandemic, there still are hundreds of billions or even trillions of dollars worth of corporate bonds that mature in 2025, 2026, 2027. And now the interest rates are much higher, which means that these corporations have to spend much more on borrowing. And this is another major reason why Trump is putting so much pressure on the Federal Reserve to reduce interest rates. It's not only because the US government wants to bring down the interest payments on US federal debt, which is 120% of GDP, but it's also because many corporations are worried about refinancing their own corporate bonds at much higher interest rates. So this explains why Trump has been putting so much pressure on the Federal Reserve, but this is also another reason driving de-dollarization. Foreign investors look at the debt situation in the US, they look at the pressure to bring down interest rates, and they say, why would I invest in US Treasury securities and other US assets, especially when there are fears of persistent high inflation, which would lead to negative real yields if you buy Treasury securities when interest rates are lower than inflation. And this brings me to another significant reason driving de-dollarization in the US, which is the fear of persistent high inflation. Now, Trump and his supporters have claimed that supposedly his sky-high tariffs are not going to cause further inflation, but that's ridiculous. More and more evidence is showing that inflation is already increasing. Now, there were delays because for months, Trump issued extensions. He went back and forth on his tariffs. He announced new deals. There was a lot of uncertainty. And also because before Trump initially announced the tariffs in April, a lot of companies in the US were stockpiling and buying massive amounts of imports. As soon as Trump entered office in January, they knew he was going to impose these tariffs. So they bought massive amounts of imports in anticipation of the tariffs. But these stockpiles have been running out, and the tariffs have been coming into place. and there's now a little more certainty. And lo and behold, we've seen that prices have been steadily rising in the US. Now, economists in the US typically use two different metrics to measure inflation. There is CPI and PCE. PCE is preferred by the Federal Reserve. CPI is used by most economists. If you look at both of them, there has been a significant increase in inflation in the past few months, and the trends look like inflation will keep rising, not fall. There's also been a massive increase in the price of services in the Producer Price Index, PPI, and this is the largest increase since the pandemic. So we're now seeing that after a few months of uncertainty and extensions, as Trump's tariffs go into effect, there is going to be a marked increase in inflation. We're already seeing it in the data. So this is really a perfect storm that is also driving de-dollarization, because foreign investors will say, wait a second, inflation is obviously increasing in the US, and yet Trump is heavily pressuring the Federal Reserve to reduce interest rates, which will only further fuel inflation. And it will also lead the US dollar to fall against other currencies. So a lot of foreign investors are going to say, wait a second, why would I invest in US dollar assets? If I'm in Europe, for instance, why would I invest in US dollar assets if one, the dollar falls against the euro, which means that even if you have a bond that has a 4.5% interest rate, if it's a US Treasury security, you're being paid back in dollars, and yet you need euro, and the dollar has been falling against the euro. So why would you invest in US Treasuries? That's one issue. And then the other related issue is that if inflation in the US continues to pick up at 4 or 5%, but then Trump is artificially bringing down interest rates, and then let's say the Federal Reserve does quantitative easing and starts buying up Treasury securities again to bring down the yields, you're going to start having potentially even negative real yields. So it's a horrible deal. So the logical response is that more and more foreign investors are either not purchasing US assets or they're thinking about selling their US assets, fueling de-dollarization. And then the final cherry on top of all of this madness is Donald Trump fired the commissioner of the Bureau of Labor Statistics, the BLS, which is responsible for providing very important data about the US economy. And without any evidence whatsoever, Trump absurdly accused the BLS chief of supposedly rigging the job data to make him and the Republicans look bad, which is completely ridiculous. And the result of this is obvious. Around the world, fewer and fewer people are going to trust official US economic data. And not just foreign governments, foreign central banks, but also foreign private investors. They're going to say, wow, Trump is just appointing a yes man to lead the Bureau of Labor Statistics, who's just going to report whatever data Trump wants. So they're no longer going to trust US economic data, and they're going to de-risk. They're going to invest in fewer US assets or even sell off US assets. So all of these factors are coming together to fuel de-dollarization. And the final one that I have here on this list today is the fear of a so-called Mar-a-Lago Accord, which is a reference to the attempt by the Trump administration to force other governments to sign a deal with the US where the US will significantly devalue the US dollar against other major currencies. This idea has been discussed by Trump's top economic advisor, Stephen Miron, who's the chair of the US Council of Economic Advisors. I discussed this in a previous report in a video, which I will link to in the description below. Miron delivered a speech at a closed-door event at a neoconservative think tank in Washington that is closely linked to the Trump administration. He gave these remarks in April, just a few days after Trump initially announced his tariffs on so-called Liberation Day. And Miron, on behalf of the Trump administration, issued 5 demands to other countries, essentially ordering them to pay tribute, imperial tribute, to the US to benefit the US at their expense. And one of these demands was literally that other countries should write checks to the US Treasury.
They could simply write checks to Treasury. That would help us finance global public goods as well.
In November 2024, just a few months before Trump returned to the White House and appointed Stephen Miron as his top economic advisor, Miron published a lengthy report that was titled A User's Guide to Restructuring the Global Trading System. And in this document, Miron talked about the idea of the so-called Mar-a-Lago Accord, and he noted that this was inspired by the Plaza Accord that the Ronald Reagan administration imposed on its allies in 1985. The US forced European countries and Japan to allow their currencies to significantly appreciate against the US dollar, which essentially was a devaluation of the dollar. This also fueled a massive asset price bubble in the Japanese economy that popped at the end of the 1980s and caused significant financial problems in Japan. So today the Trump administration wants to try to do basically the exact same thing, and maybe the Trump administration could force its vassals, its so-called allies in Europe, to do what they did in 1985 with the Plaza Accord, but there's no way that Trump will convince China and other major economies in BRICS to do the same thing, because they know very clearly that the Plaza Accord caused significant problems in Japan. They learned from history and don't want to repeat Japan's mistake. So what does the Trump administration want to try to do? Well, Trump's top economic advisor, Stephen Miron, spelled it out in this report that he published in November. He floated the possibility of issuing century bonds, that is 100-year bonds. That is, the US government gives you this bond, you lend money to the US government, and Washington says to you, we will pay you back in 100 years, and during that century, we will pay you a very low interest rate, below the current market interest rates being offered at auctions today for US Treasury securities. And Miron made it clear in this report that the Trump administration strategy is to force other countries to hurt themselves on behalf of the United States. He said that they want to force other countries to strengthen their currencies in order to help the US devalue the dollar, which means that reserve managers at central banks in other countries will be forced to sell dollar-denominated assets. And as their currencies appreciate against the dollar, according to Stephen Miron, this will give the US economy an advantage. US exports will be more competitive, he argues. US manufacturing will be more competitive because US exports will be cheaper compared to other, like let's say German exports, if the euro significantly appreciates against the US dollar. And then Miron wrote, as these foreign reserve managers are selling their US assets, what he wants is a, quote, term out of remaining reserve holdings, end quote. What does that mean, translated into simple English? A term out is when you have short-term debt and then you refinance it for the long term. So let's say you lent someone money and you promise to pay them back in 1 year. Well, if you want to term out your debt, you can tell them, okay, I'm going to pay you back in 5 years or 10 years, and you can offer some kind of interest rate. Well, what the Trump administration is potentially planning is forcing foreign investors, foreign holders of US government debt, US treasuries, it's telling them, okay, you bought a 10-year treasury security 5 years ago. We promised you when you bought it that we would pay you 5 years from now. And when you bought that treasury at an auction, there was an interest rate, a yield on that treasury. Well, what the US government is now thinking of saying is, no, actually, we're not going to pay you back in 5 years. We're going to pay you back in 95 years. We're going to change this 10-year note or 20-year bond or 30-year bond for a century bond. And adding insult to injury, what they're potentially talking about doing is paying a low interest rate on that century bond, which means that over time, the foreign holder is going to be losing value. They're lending money to the US government basically for free or for very low interest payments, probably below inflation or certainly below market interest rates. As Stephen Miron, Donald Trump's top economic advisor, as he wrote in this report, quote, the US Treasury can effectively buy duration back from the market and replace that borrowing with century bonds sold to the foreign official sector, end quote. Now, no logical person would accept this. This is obviously an extremely unfair agreement. But the Trump administration thinks that it can force its so-called allies, that is vassals, to accept this unequal treaty, just like how the US forced the European Union to sign this unequal treaty in which the US puts 15% tariffs on European exports to the US, but Europe does not respond with any tariffs on US exports to Europe. This is the Trump administration strategy with the so-called Mar-a-Lago Accord. It wants other countries to hurt themselves in order to benefit the US, to pay imperial tribute to the US government. And even though this hypothetical Mar-a-Lago Accord has not officially been announced, the fact that it's even being discussed has led to more and more interest in de-dollarization. And as I've been stressing, it's not just foreign governments and central banks and BRICS countries that are trying to de-dollarize, but increasingly, it's also foreign investors. It's foreign asset managers and investment banks and pension funds. They're all thinking about how they can de-risk, how they can reduce their exposure to US assets and the US dollar. So this is all contributing to de-dollarization.